Welcome to the deep dive. Today, we're jumping right into Rivian's first quarter 2025 financials. They're the American electric vehicle maker.
Yeah, and we're working mainly off their official news release, the one dated May 6th, 2025, where they laid out all these results.
Right. And our plan today is, to unpack the key findings from this report. What does it all mean for Rivian? And really just give you the most important takeaways.
And there's some pretty exciting stuff right at the top.
Definitely. Rivian hit its second straight quarter of gross profit, and they also locked in a huge $1 billion investment. So, yeah, let's explore how they managed that.
Well, it seems that second quarter of gross profit, which hit $206 million, their highest yet, by the way, that achievement seems to have been the key.
The key to unlocking the VW money.
Exactly. That $1 billion investment from the Volkswagen Group, it's part of their joint venture, the Rivian and VW Group Technology LLC. It's expected around June 30th.
So hitting profit again must have sent a strong signal.
I'd say so. It likely showed VW, a business that's getting costs under control, becoming more efficient, makes the investment look, well, less risky. Probably aligns better with VW's own electrification goals, too.
So it wasn't just a nice number on a page, it had a billion-dollar result. Okay, what about actual vehicles, production and deliveries?
So in Q1, they built 14,611 vehicles. That's at the normal Illinois plant.
Okay.
And they delivered 8,640. What's important here, I think, is that these numbers were pretty much what management had guided for.
Right, so no big shocks there, which, can be a good thing. Predictability.
Investors usually like predictability. It suggests management has a decent handle on things, on their production, their deliveries, builds a bit of trust.
Makes sense. And the CEO, R.J. Scaringe, he weighed in.
Yeah, he had a quote in the release.
He said, this quarter we hit our second consecutive gross profit and our highest gross profit to date at $206 million. He also mentioned R2 progress.
Right. Significant progress on R2,
Mm-hmm.
including vehicle validation builds underway and our normal Illinois manufacturing facility expansion on track.
That gross profit point keeps coming up. It feels like a really big deal for them.
Oh, it is. Especially for a company still in, its growth phase. It suggests they're getting better at making money on each vehicle sold, moving towards sustainability.
Okay, so shifting from the immediate finances, the R2, that's their next big thing, right?
Definitely. And the report says they're making significant progress.
They mentioned design validation builds are happening now.
Yeah, on the prototype line. And interestingly, they said they're using mostly production tooling for those builds.
Production tooling already. Why is that important at this stage?
Well, using production tooling this early means they're testing the actual manufacturing process. They can find problems, bottlenecks much sooner.
So it could make the real production ramp up smoother later on.
Exactly. Fewer delays, hopefully fewer cost surprises when they actually start building the R2 for customers.
And the factory expansion in Normal, that big 1.1 million square foot addition.
They say it's moving fast, right on schedule.
Good sign. And crucially, R2 production is still pegged for the first half of 2026. They reaffirmed that.
Yeah. Sticking to that timeline is pretty critical, I think. The R2 is meant to be more mass market drive volume and hopefully push them further into profitability. It targets a different price point.
Okay, but it's not all smooth sailing, right? They mentioned external factors.
They
Yes.
acknowledge that even with a lot of U.S. manufacturing and sourcing, they're not, immune to global stuff. Trade issues, the economy.
Right, things like trade regulations, tariffs, how that might affect how people feel about buying, consumer demand.
It's a really important reality check. Even innovative companies are tangled up in these bigger economic forces. Tariffs can raise costs for parts, even if you source a lot domestically.
And it looks like these factors are having an impact on their plans.
Yeah, they adjusted their delivery outlook for 2025, lowered it a bit.
What's the new range?
Now, it's 40,000 to 46,000 vehicles for the year. That's a revision down.
Okay, deliveries down, but what about profit outlook?
Interestingly, because Q1 was strong, their adjusted EBITDA guidance, that's earnings before interest, taxes, depreciation, amortization, that loss range stays the same.
Which is?
Still expecting a loss between $1.7 billion and $1.9 billion for the full year. And they also still think they'll hit a modest positive gross profit for 2025 overall.
Huh. So deliveries down, but the profit picture hasn't worsened for the year. What does that suggest strategically?
It kind of suggests they might be tapping the brakes slightly on just pure volume growth, maybe because of those economic headwinds you mentioned,
Yeah.
but they're laser focused on making each vehicle profitable.
Right, prioritizing financial health over just chasing unit numbers right now.
Seems like it. Financial sustainability looks like the name of the game in the short term.
And those tariffs are hitting their spending too, right? Capital expenditures.
Yeah, they bumped up the guidance for CapEx, now expecting $1.8 billion to $1.9 billion. And they specifically mentioned tariffs as a reason for that increase.
So real money impact from global trade stuff.
Absolutely. It shows
Good.
how these policies directly affect their spending on future growth and operations.
Okay, let's switch gears a bit. Away from just the numbers, customer engagement.
They highlighted demo drives, did over 36,000 in Q1.
Wow, 36,000. That's their highest ever in a quarter. Shows people are interested, definitely.
Yeah, getting people behind the wheel is huge for EVs. Lets them actually experience it, ask questions. It can be a really effective sales tool.
And they did something at South by Southwest, too.
Over 7,000 electric joyrides in Austin. Kind of a cool way to reach a different crowd.
Yeah, not your typical car show audience. Smart.
Builds buzz, brand awareness, gets the name out there.
What about the commercial side, the vans?
Big news there, too. They announced a partnership with HelloFresh.
The meal kit company.
Yeah. HelloFresh is putting 70 Rivian commercial vans into its fleet, branded for their factor service.
Okay, 70 vans. Is that significant?
It is, because it's their first major fleet customer announced since they really opened up van sales more broadly, beyond just, Amazon initially.
Ah, okay, so it's a validation of the van for other businesses.
Exactly. Shows it works in the real world for companies looking to go electric, cut costs, reduce emissions.
Yeah.
Could open the door for more fleet deals.
Good point. So just to quickly reset for everyone listening, Rivian, American company, EVs, software services.
Their whole mission, as they stated, is pushing the world towards zero-emission transport faster.
And the vehicles are built in the U.S., sold directly to people and businesses.
Yep. That direct model gives them control over the experience, and selling to both markets offers some, diversification.
Okay, last piece. The balance sheet snapshot, end of March numbers.
Right. Total current assets were about $10.4 billion, just slightly down from the end of last year.
And within that, cash.
A lot of cash. $5.294 billion in cash and cash equivalents, plus another $2.4 billion in short-term investments.
And inventory.
About $2.25 billion in inventory. Total assets overall were just over $15.4 billion.
Liabilities.
Liabilities were around $8.8 billion, which leaves stockholders' equity at about $6.56 billion.
That cash pile, nearly $5.3 billion, that stands out.
Oh yeah, that's a really important cushion for them. They're still spending heavily on R2 development, scaling up. Having that cash is crucial, especially with the economy being, well, uncertain.
So wrapping this all up, Q1 2025 feels pretty significant for Rivian,
Definitely a key quarter. They hit that vital second gross profit number.
which directly triggered that huge VW investment.
Right, and they seem to be making solid, tangible progress on the R2, which is so important for their future.
But at the same time, they're clearly dealing with the wider economic climate, adjusting forecasts, dealing with tariff impacts.
It's a balancing act. But this deep dive gives you a pretty clear picture based on their own report of where they stand right now. You can see the progress, but also the hurdles.
Yeah, you get a sense of their financial health and what they're focusing on next.
And it really highlights how getting the finances right connects to securing investment while also needing to manage all those external pressures. It's all linked.
Absolutely. Which brings us to a final thought for you. With this big investment secured and the R2 getting closer, what kind of impact is Rivian really going to have on the whole EV market over the next few years?
Yeah, and how will these shifting global trade winds continue to shape not just Rivian's path, but maybe the broader industry's direction too? Something to definitely keep an eye on.
Thanks for taking the deep dive with us.